$690 billion. That is what the 5 largest cloud companies are spending on AI infrastructure this year. Amazon, $200 billion. Google, $175. Meta, $135. These numbers doubled in 12 months. But here's the problem nobody wants to talk about. Half of that money has nowhere to go. Of the roughly 12 gigawatts of data center capacity planned to go live in the US this year, only a third is under construction. The rest is frozen, waiting for grid connections, transformers, and power that does not exist yet. The bottleneck is not chips, it is not capital, it is electricity. The companies that have power are the companies that win. Every AI data center needs 3 things to operate: chips, cooling, and power. Wall Street is obsessed with the chips, but a GPU without a power connection is a paperweight. The grid was not built for this. A single hyperscale AI data center draws 100 to 300 megawatts, equivalent to a mid-sized city. The transformers and switchgear that connect data centers to the grid have lead times of 3 to 5 years. Data center construction runs in 18 months. That mismatch is the structural bottleneck. PJM, the largest US grid operator serving 65 million people, projects it will be 6 gigawatts short by 2027. Power is not a temporary constraint, it is a multi-year structural deficit. This is layer 3 of the framework, the AI commodity and hardware bull market. Capex is flowing. Physical scarcity determines who wins, and the scarcest resource in AI infrastructure right now is not silicon. It is the electrical grid. So who has the power? One company just energized 1.4 gigawatts of substation capacity in West Texas, 6 months ahead of schedule. That company is IREN. Ticker IREN on the Nasdaq. Market cap around $5 billion. IREN started as a Bitcoin miner, building data centers on cheap energy. That gave them what most AI companies do not have: existing grid connections, land, and operational infrastructure. In November, they signed a $9.7 billion contract with Microsoft for GPU cloud infrastructure. 5-year term, 20% prepaid. That is committed capital. The numbers. Sweetwater Phase 1, 1.4 gigawatts energized this month. Phase 2 at 600 megawatts. Total campus, 2 gigawatts on 1,300 acres. The company has secured nearly 3 gigawatts of total power and is currently using only 460 megawatts, 16% of capacity. The runway is enormous. The GPU ramp is underway. IREN plans to deploy 140,000 GPUs by end of 2026, starting at 50 megawatts of new capacity each month from mid-year. Management guides to $3.4 billion in annualized run rate revenue. Current fleet, roughly 23,000 GPUs. The scaling challenge is real, but the power and the contract are already in place. Bitcoin mining funds operations while AI revenue ramps. That dual structure separates IREN from pure-play AI companies that burn cash waiting for deployment. The risk, and this matters, going from 23,000 to 140,000 GPUs in 12 months is an operational challenge. If timelines slip, revenue pushes into 2027. Now, the elephant in the room. In March, IREN filed a $6 billion at-the-market equity facility. The stock dropped 8% in a day. Critics called it the AMC of AI. Here is our read. This is an optional facility, not a forced raise. IREN has a $9.7 billion contract with Microsoft, 20% prepaid. They have 3 gigawatts of secured power in a market where power is the scarcest asset. They are raising capital from a position of strength, not desperation. The company that controls the grid connection sets the terms. That does not mean the dilution is free, it means the asset backing it is real. Size accordingly. One of the sharpest macro minds on Wall Street argues that the AI build-out is a commodity and hardware bull market. The companies that own the physical layer, the power, the land, the grid connections, set the terms. 12 gigawatts of data center capacity is stuck waiting for power. IREN just delivered 1.4 gigawatts, 6 months early, with a $9.7 billion contract attached. While others are in queue, IREN is energized. While others negotiate grid access, IREN owns the substation. The chip gets the headline, the power grid gets the profit. Follow the infrastructure, TCKR. Every day a ticker. Subscribe for the next one. TCKR is independent media. This is not financial advice. Always do your own research.